It's almost 1 p.m. in Sydney. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories.
There's no place in America for this kind of violence, for any violence, ever. Period. No exceptions. We can't allow this violence to be normalized.
President Biden urging unity, warning the nation is heading down a dangerous path after the assassination attempt on Donald Trump. Also ahead, China surprises with a miss on second quarter GDP growth, just ahead of its biggest policy meeting in 6 years. And the race to replace China's top spot in emerging market equity portfolios is heating up, with Taiwan and India facing off. But for now, let's check in on how markets are faring. Avril Hong's in Singapore. Avril.
Yeah, Paul, we're watching two things in the markets today, the so-called Trump trade and the reaction to the miss from China's data. And after the developments over the weekend out of the U.S., we're actually seeing a bit of an echo from the post-presidential debate reaction in the market from late June, where the dollar is picking up some ground. U.S. Treasury futures are down. We're also seeing Bitcoin moving past 62,600 thereabouts. Of course, Trump is seen as pro-crypto to some. The Chinese currency has been on the back foot for much of today, and then we got the data out of China. Bonds there catching a bit of a bid. The Hang Seng and Hang Seng China extending declines after the data dropped. CSI 300, a bit of green. Let's flip the board and recap the data that we got out of China just in the past hour, where the second quarter GDP growth was much weaker than expected, coming at 4.7% versus estimates of 5.1%. Industrial production was slightly better, but the pain point was retail sales. Big miss there, missed all economists' expectations. And among the consumer sectors, we saw big declines in automobiles as well as cosmetics. And perhaps also worth noting here that this is the first print that we're getting that doesn't have statistical distortions from the post-pandemic reopening. Let's flip the board and take a look at some of the other things that came out of China today. It wasn't just these activity indicators. We also got housing prices for new and used homes, and that showed that steep decline despite the rescue package that was unveiled in May. So really showing you here the trouble surrounding the real estate sector. We got the PBOC also leaving rates unchanged as expected, but they refrained for yet another month from putting money into liquidity-wise, and it shows you here how they might be a bit more cautious about monetary easing given the currency depreciation risks here, Paul.
All right, thanks, Avril. Let's get a bit more reaction to China's later economic data with Piqian Liu, Asia economist at Fidelity International. And Piqian, I want to just start with that headline, second quarter GDP number, big miss there and pretty close to the low end of the estimates. What's the long-term growth story for China here? And do you expect to hear any major announcements at the third plenum?
Thank you for having me today, Paul. Today's GDP data slightly behind the market expectations, but it's still showing somewhat a divergent growth pattern. In our base case this year, we think China is going to land in a growth trajectory of a controlled stabilization, where they are going to meet the growth target of around 5%, but beneath that, we are probably going to see continued outperformance of the manufacturing and export sectors, as today's data have shown, but with the drag coming from the property and consumer sectors for the time being.
Yeah, well, let's talk about some of those other numbers. The industrial production number, that was a beat, but at the same time, China's still grappling with an overcapacity issue. So is there a bit of a cloud even to that silver lining?
Well, I think over the long run, China is still going to maintain its manufacturing dominance or competitive advantage in the global stage. We're now having a third plenum ongoing, which is probably going to throughout the week, and we're going to hear some of the policy announcements from short and medium-term focus. We think nurturing new productive force is continued to be one of the policy priorities, but beyond that, we're also looking for some of the policy effort to address the the imbalances that's within the economy right now. So tax reform, fiscal reform is also some areas we're watching out for, and hopefully that could partly address that imbalance issue right now.
And could that address some of the issues around consumer sentiment as well? Because just to round out the trifecta, the retail sales number was also woeful. I think that was the lowest read that we've had since China emerged from the COVID restrictions.
Yeah, I think the consumer sector is currently facing some pressure from multiple factors. Property was definitely dampening the wealth impact from the consumer sector, and also pressuring of wage growth in the higher and middle income group is also affecting the consumer sector. But we think that with gradual growth and recovery, hopefully the wage growth will be picking up, and that will stabilizing the consumer sector in the medium term.
Yeah, property casting a long shadow over everything. Local government debt, another serious issue. Are you expecting to hear any meaningful movement on either of these things at the third plenum? Because so far we've had mainly incremental responses to these problems.
Yes, we're still currently in the muddle-through stage for the local government financing issue as well as property. I think third plenum is a good platform to address some of those structural issues and hopefully resolve the local government and central government fiscal situations in a more sustainable way. So yes, indeed, we're thinking and looking for some breakthroughs in the upcoming plenum.
Of course, China's also dealing with chip curbs, other curbs from the United States and the United States allies. And with President Trump now looking increasingly likely to return to the White House for a second term, is this something else for the third plenum to consider? Do you expect to hear any announcements about these sorts of policies around chips and trade?
Well, I think that revolves around the relationships between the government and the markets that the third plenum will likely to be addressing. So on that front, I think by emphasizing more on nurturing new productive forces, trying to support domestic and indigenous innovation forces, will likely to be partially helpful to address the pressure that China is currently facing from an external front.
I just want to talk about something other than China. Let's just focus on Japan for a minute. The market there, of course, closed today for a public holiday, but we've seen a little bit of strength in the yen, now below 158. Do you feel like maybe the floor is in here and the trend has turned? Are we looking stronger here as we look ahead to the BOJ meeting at the end of the month?
Well, I think for pertaining Japanese yen, it's still largely a story of US-Japan yield differentials. So given that we haven't yet seen a very obvious pivot from the Fed, as well as a very hawkish rhetoric from the BOJ, I think the dollar-yen momentum will likely to stay, even though they're showing early signs of stabilization. So the July BOJ meeting will be very critical for us to watch, to look at the BOJ's attitude towards inflation and its impact on growth, as well as if weak Japanese yen will be part of the calculus for BOJ to accelerate its pace of policy normalization.
And is 2% inflation looking sustainable to you now?
In our view, we think that the wage growth pass-through towards the underlying inflation momentum looks fairly sustainable for the time being. So the condition is ripe for the BOJ to commence with another rate hike. So in our base case, we think that the July meeting will likely be the case for the BOJ to announce another policy rate hike.
All right, Pi-Chien Liu of Fidelity International, thank you so much for joining us. And you can also tune into your Bloomberg or turn to your Bloomberg terminal for more on this story. You can go to T-Live Go to get commentary and analysis from Bloomberg's expert editors. Well, still to come on Bloomberg Markets Asia, APAC Advisors says Donald Trump now in a better position to win the election after surviving a shooting. Their CEO Stephen Okun joins us for analysis next. And later this hour, we'll speak exclusively with Kotak Investment Banking about the fundraising spree in India. This is Bloomberg.
There's no place in America for this kind of violence, for any violence ever. Period. No exceptions. We can't allow this violence to be normalized. In America, we resolve our differences at the battle box. You know, that's how we do it, at the battle box, not with bullets. The power to change America should always rest in the hands of the people, not in the hands of would-be assassins.
President Biden there speaking earlier from the Oval Office, condemning the shooting at this weekend's Trump rally in Pennsylvania. So for the latest on this, let's bring in our managing editor for breaking news in South Asia, Derek Wallbank. So Derek, we have former President Trump now in Milwaukee. The nomination's in the bag, but can we now say that perhaps the presidency might be in the bag too?
Well, Paul, I think it's a little bit too early to say that, but we certainly are in a situation where President Donald Trump faced a very scary situation, a couple of inches differently, and we are having a very different conversation right now. And there's a certain sobriety about that fact that I think is resonating throughout American politics right now. There are a lot of questions ongoing, as well there should be, about how a gunman was able to take an elevated position that close to a presidential candidate, somebody who has formerly been president of the United States. There are a lot of questions about that I think are going to be the subject of intense conversations. The shooter, as you mentioned, is dead, was shot. So that sort of part is there. We're hearing from law enforcement that they're not concerned about this being a part of a larger thing, but I think there are a lot of questions about the motive, what spurred this person to try and take those actions, and then, as I say, how that person could possibly get into that setting to be able to do those things without being intercepted along the way, arrested, otherwise compromised, etc. Trump is, as we said, scheduled to be in Milwaukee for the Republican convention. He landed in Milwaukee just a couple of hours ago. He told the Washington Examiner in an interview that he has substantially rewritten his remarks. They were going to be a lot about Joe Biden. Now he said they're going to have more of an uplifting tone to them. And I do think that right now in American politics, this is not a situation that people have seen in recent memory. And so I think that there's no real playbook for how we proceed here. But there are, it's impossible to go forward without taking stock of where we are.
Yeah, absolutely. A lot of things being rewritten at the moment. We'll talk a little bit about what's next for the Secret Service, the questions around that in a second. But first off, we do have details trickling in about the shooter. What do we know so far?
Young man from Pennsylvania. It does not appear like this person at the minute was a particularly vocal partisan on any side of the aisle, and that's sort of about what we have. We're still hearing a little bit of drip, drip, drip about him. I wanted, Paul, I wanted to address sort of the first part of the question, though, is that we don't have a lot of polling on how this looks like, but we have seen some pretty clear market indications in terms of where people are going. That stock in Shenzhen, where the company name roughly sounds like Trump wins big. That's limit up right now. We have seen some suggestion that Trump's own publicly listed company is going to go up a fair bit. That moved up in the Robinhood markets, and so there are some suggestions that the market indication, and you certainly saw this with political futures markets, that the market indication is that there is more movement toward Trump right now. I did see something, and as I say, in the absence of polling, it's hard to know what this does in terms of uncommitted voters. But I did see some commentary from Frank Luntz, who has a good beat on public opinion, saying that he sees some indication that Trump fans who may not have been planning to vote are probably going to be more energized after this, and that could lead to maybe 1 percentage point, 2 percentage point increase for Trump, both nationally and across a lot of swing states. We'll sort of see how that plays out. Very early to say right now. All
right, Bloomberg's managing editor for breaking news in South Asia, Derek Wallbank there. Now, our next guest served in the Clinton administration and has worked at past Democratic national conventions. Joining us now from Los Angeles is Stephen Oken, founder and CEO of APAC Advisors. He's also a board member of the American Chamber of Commerce in Singapore and the APAC Council of American Chambers of Commerce. Stephen, thanks so much for joining us today. As Derek mentioned, there no polling yet in the wake of this assassination attempt. But what we do have is some betting odds, and we have a chart here from Predicted showing a huge jump in support for President or former President Trump. We also have that now iconic image of him with his fist clenched and raised. Now very difficult, you would think, for the Biden campaign to go on attack here. And as we were discussing with Derek, everything's really getting rewritten now. But is Trump almost impossible to beat at this point?
As my former colleague in the Clinton administration, Mike McCurry, often says, the only thing predictable in presidential campaigns is that they are unpredictable. So we can't figure out what's going to happen in the next few months. We can certainly figure out, though, what's going to happen in the next week. And the Republicans are so much better positioned now than they were before this terrible attempt on President Trump's life, this murder of at least one of his supporters. But what this has done is it has unified the Republican Party. Going into the convention, about 20% of Republican primary voters, they voted for Nikki Haley. They did not like Donald Trump. Unclear if they were going to vote for Joe Biden or stay home. They probably weren't going to vote for Trump. But what's happened now is that the Republicans have all come together. Nikki Haley, who hadn't been invited to the convention, now has a convention speaking slot. And the Republicans are going to be able to come out of this week much more unified than they would have otherwise, and a unified, energized party. That's what you want out of any convention. And the Republicans are going to hit that and then some.
Well, of course, the convention conveniently going to be located indoors. I imagine security is going to be even tighter than it ordinarily would have been. But what's it going to mean for security out on the campaign trail now? And do you think that this call from President Biden just to turn down the temperature on everything is going to be heeded?
Yeah, I mean, well, conventions, and I've worked at three of them. On the Democratic side, the Republican one's the same. The security is extraordinarily tight to get anywhere near the convention center, let alone in it. So I don't think there's any real security risk at the convention. But what's going to happen between now and November? Is this going to be a turning point in the U.S. where both sides say the rhetoric has gotten way too heated? It's gotten too heated from the Republicans and from Donald Trump. It's gotten too heated from the Democrats and Joe Biden, and that both sides are going to find a way to campaign on their extraordinarily significant differences, but not do so with such incendiary terms that are thrown about, traitor and enemy of the people and putting a bullseye on somebody. All of that should have never happened. Maybe that'll stop now. Or if this isn't a turning point, are we going to see the type of attacks, unfortunately, we've seen in recent history? Attempted murder on Gabrielle Giffords, a Democratic congresswoman, attempted murder on Steve Scalise, a Republican congressman, the attack in the home of Speaker Pelosi, then Speaker Pelosi, on her husband. All of this has been going on for the last few years, and it has got everybody very nervous. Are you going to see more of this type of violence? Are you going to see copycats come out of this? Or can we as Americans tone all of this down, which President Biden called for and President Trump said he's going to call for as well, or former President Trump said he's going to call for as well?
Yeah, well, President Biden said on the weekend that this is unheard of. That's certainly a point of contention. But one other thing that's happened is we've stopped talking about President Biden's age, for now at least. Can you see that remaining the case for very long? Or can you still see a scenario where we get to November with a new Democratic candidate?
Again, anything is possible in this day and age. It is solely President Biden's decision. He has the delegates. They are his and his alone. It is up to him if he is going to release them. He has shown no inclination that he is going to do that. You could certainly see this going one of two ways, but from everything President Biden has been saying, he's going to stay in the race. He's going to try and help heal the country that needs healing right now. Is he the right person to do it? Is he a right candidate to do that? I mean, the Democratic Party, led by President Biden, has about a week and a half, maybe 2 weeks to figure that out. But what this certainly does in terms of why you see those betting markets increasing the odds on Donald Trump is that if this is an election that is not on President Trump and his policies and what he would do to the country from a policy perspective on immigration and deportation, on tariffs, on the climate, and most importantly, from a democratic and independent perspective, reproductive freedoms. If all of that goes away, then this makes Donald Trump so much more of a stronger candidate. And Joe Biden, whose approval ratings are in the 30s, is going to have a really tough time to beat him if he can't reframe the narrative, and he hasn't been able to do so yet.
Well, you've worked on Democratic campaigns previously. If you were working on the Biden campaign right now, what would be the plan? How do you go on the attack?
Well, this situation makes it so much more difficult. And that's what President Biden said in that Oval Office address today. President Biden said, we have to be, we have to take a step back. We can't allow violence to be normalized. But we have to be able to debate. I mean, look, Aristotle says, man is by nature a political animal. You have to have that politics going. But what happens if the Democrats go too far on the attack? Then they are going to get a huge blowback against them. And so then that's why it becomes so much more difficult now for the Democrats and President Biden and his campaign to show the real differences between President Biden and a second Trump administration. And so can they talk about President Trump taking away and Republicans taking away reproductive freedoms? And if they do, then will they be accused of using incendiary, violent language? And that's why it is the Democrats who we're going to counter-program the Republican convention aren't going to be able to do that this week.
All right, Stephen Okun, founder and CEO of APAC Advisors. Thanks so much for joining us with your insights. We have plenty more ahead. This is Bloomberg. All right, let's see if there's a Trump trade going on. Kind of. Let's take a look at some of the stocks that are moving higher at the moment. Shares of South Korean defense, nuclear energy firms, they are climbing. These are stocks that are seen as potential beneficiaries of a Trump victory in November. And of course, as we discussed a moment ago, betting odds have a bump in support for President Trump following that failed assassination attempt over the weekend. Take a look at currencies as well. We've got the dollar spot index gaining, the US dollar gaining against all of its major peers. That notwithstanding, the yen holding up pretty well. Plenty more to come. This is Bloomberg.
This event has sort of restated or reshaped the baseline of the campaign. Trump looks a lot stronger. It's not that we're going to see a massive bump in the polls for him. This election was always going to be close. It will remain close. But the issue now, or the thing now, is that Trump's base of support is solidified. It'll be much harder for him to lose ground, and by exchange, it'll be much harder for President Biden to make up ground.
It is going to cause the Republican National Convention to have a more conciliatory tone, to have a more patriotic and hopeful tone this week in order to bring that temperature down.
Beijing has been tilting its assessment in favor of Trump winning the presidency. I think they're likely listening to the discourse coming out of the United States over the past 24, 48 hours, and I think we all seem to think this further moves the needle in Trump's favor.
Some of our guests speaking earlier on the implications of the assassination attempt on Donald Trump. Let's take another look at how markets are reacting. The first day of trade following this. Avril, what are you watching?
Yeah, Paul, we're seeing a bit of a repeat of the post-election debate reaction in the markets from late June, right, where the dollar is gaining some ground, maybe some knee-jerk reaction. Treasury futures are lower. This is pointing to higher yields at the start of trade in London. Of course, we don't have cash trading of treasuries today. Japan is closed. But also the weakness that we're seeing on the renminbi, while Chinese bonds are catching a bit of a bid and the Hang Seng is extending declines even further now, almost 1.5% off. Worth noting that in Korea, we are seeing the Korea defense nuclear-related stocks that are maybe helping to cap some of the declines on the Kospi. But this is what we're seeing in the markets overall, although worth noting that in terms of the dollar, the slight strengthening we're seeing here might not last, especially given the expectations of Federal Reserve easing. There's even talk about how we might see a 50 basis point move in the market in September versus what markets are pricing in now of 25 basis point reduction. Let's flip the board and just recap as well some of the reaction in the business community in the aftermath of the attack on Trump, where we had the likes of Elon Musk, Bill Ackman, who had previously refrained from outrightly endorsing the former president within minutes of the attack, coming out with statements supporting him. We also had the likes of Sundar Pichai as well as Jamie Dimon, of course, the JP Morgan CEO, denouncing the political violence. So these are some of the comments that have come out in the wake of that attack. Paul.
All right, thanks, April. For more on the markets now, let's bring in Bloomberg MLive strategist Mark Cranfield. And Mark, April there outlining some of the stocks that have been moving following this attempted assassination attempt. We've also got a stock called WiseTech doing very well in China because the name translates to, or sounds like, Trump wins big in Mandarin. But does this Trump trade really exist, or are we chasing shadows here?
I think it's more of a Powell trade, really. And you're going to hear from Jerome Powell today, and he's going to be setting out the platform for the Federal Reserve to start lowering interest rates, quite possibly as soon as September. It's almost becoming a consensus trade that the Federal Reserve will start easing then. There's an outside chance it'll be July, but more realistically it's going to be September, and maybe they're even going to go big. As April mentioned there, some traders even think that 50 basis points is on the cards. And don't forget, it's a very different scenario to 2016 when President Trump won the elections. Then the Federal Reserve was at the beginning of raising interest rates. Interest rates have been around the zero area for a long time. They'd done one increase the previous year. They hiked just a few weeks after those November elections. They continued raising interest rates through 2017. The scenario is completely different this way around. Also, a lot of those Trump trades were focused around the fact that the Republican Party won all three pillars of the US government, the President, the Congress, and the Senate. We don't know yet whether that's going to be the case, and indeed, many analysts are not forecasting a clean sweep of that type yet. So there's a long way to go there. Traders are not going to be doing too much in that way. So yes, there may be a bit of a knee-jerk reaction, and the steepening trade certainly makes a lot of sense because that's what the Federal Reserve is driving anyway. They're helping to push the two-year yield down more quickly. The curve is already inverted, so it's definitely easier for traders to go into a steepening position from there. So there may be some legs to that. But whether we get the full-blown repeat of 2016, that doesn't seem likely, at least at this point, maybe closer to November.
Well, if we entertain a hypothetical here, November rolls around and we do get a second Trump presidency. I mean, of course, he can't control the Federal Reserve, but he can make appointments to it. Jay Powell's a Trump appointee. Could he be replaced? Could we see other appointments made at the Fed? Might there be a change in policy that is perhaps politically motivated in some way?
Well, given some of the things that he said in public, it'll be surprising if he doesn't appoint certain people to the Federal Reserve that he likes. He did the same thing in his previous term. But traders can't put too much emphasis on that yet. There's so much that needs to be done between now and then. Those events are really too remote for people to put their money to work expecting that to happen. They're more likely to put their money where there's a little bit more certainty. For example, rotation in US equities was beginning to happen. We're deep into the earnings season this week. Those kind of things will have legs. People will see that those are the kind of things that could play out over the summer in the United States and into the elections. So that, yes, is something where traders can put their money and expect to get some kind of return.
As you're speaking there, we see at the bottom of the screen Bitcoin. That did move higher, and a Trump presidency is considered to be potentially positive for crypto assets. Is that somewhere where investors can look at in the shorter term?
Well, Trump himself has come out saying that he likes crypto. He attended a big conference. Elon Musk has donated to Trump's campaign, and of course he loves Bitcoin himself and other cryptos. So certainly there's some kind of a theme here. You can see easily why people want to jump on that as being a trade. And of course it's very much in the public domain. A lot of the people that punt around in Bitcoin are individual people who do it over weekends often. That's one of the biggest trading times for cryptocurrencies in general. So certainly it feeds into that theme. It's a very speculative and volatile market. But when you've got the public involved and they like to go with meme stocks and anything that happens on the social media platforms, certainly cryptocurrencies fit into that space.
What about some of the other haven trades that we're keeping an eye on? Precious metals, golds. I mean, we don't have bonds trading at the moment with Japan closed. Could we anticipate any movement there when Europe begins trading?
Yeah, we're going to see something happen in the treasuries. If you look at the way the futures are going, it indicates that the yield curve will be slightly steeper. 10-year futures have come off a bit here in Asia, where 2 years is almost unchanged. That implies 2-3 basis points change on the yield curve. That's as you would expect. And again, when Jerome Powell speaks later today, he's probably going to endorse similar themes to that. Gold is certainly a place where there could be some traction there. Central banks have been buying quite aggressively. China seems to have slowed down, but other central banks are stepping up. And it seems to be one of those things that has gained a certain amount of favorability in a broader investing class. So gold probably has a decent path regardless of what the Fed is doing and where the elections are going. It's probably one of those things that can sustain for some time.
All right, MLive strategist Mark Cranfield there. Well, former Fed Vice Chair Richard Clarida says he's not expecting drastic changes to US monetary policy, regardless of who wins the election in November. Clarida, who is now PIMCO's global economic advisor, also told us when his firm thinks easing is going to begin.
We expect the Fed to start cutting in September. I think the data has moved in a direction, both in the labor market and in the inflation data. Well, I think we're actually hearing from Chair Powell today. We've heard a lot from Chair Powell, Centra, and up on the Hill. So we'll get more insight and, of course, a Fed meeting. But we do expect Fed rate cuts this fall, obviously during the Biden presidency. And then the course for policy under either a Biden or Trump presidency, I think, is going to depend on the data and the evolution of the economy.
You were vice chair during the Trump administration, and we saw, of course, a lot of pressure coming from the administration itself on the Federal Reserve.
Yeah.
How much influence does the president have on the Fed?
Well, the influence any president has on the Fed is through his ability to nominate individuals to be governors, vice chair, and chair. But a president can only nominate someone to the Fed if there's a vacancy, and there will be no vacancies on the Fed. At least none are scheduled to occur until May of 2026, when Jerome Powell's term is up. So over time, a president can nominate individuals, but they are subject to Senate confirmation. I can tell you, having gone through it, it's not a rubber stamp. The Senate takes the advice and consent very seriously. And so over time, the president can put appointees in if they get confirmed. But nothing happens on day one. The Fed on the first day of the next presidency is going to be the same Fed that we have right now.
Moving forward, because it's not just the rate cut that we could see this year, there's a few more that are priced in as well for next year. Do you see, though, the Fed being a little bit constrained if Donald Trump is re-elected and we do see higher tariffs and looser fiscal policy?
Well, again, there are certainly scenarios that would be inflationary, and the Fed's job is to maintain price stability. I would point out, during my time at the Fed, 2018 to 2022, there were tariffs put in place, and there were immigration restrictions, and inflation was actually relatively low, in fact, a little bit below 2%. So the details are going to be actually quite important, and I think it would be too soon to predict. But certainly there are scenarios where that could be an issue for the Fed, but I think it's just too soon to tell.
How well is the Fed doing right now when it comes to reining in inflationary pressures?
Well, I think you have to give the Fed pretty high marks so far. They raised rates aggressively. They by their own account, they got a late start in March of 2022, 6 to 7 months maybe. But under Jay Powell's leadership, they pushed rates into restrictive territory. Inflation, which was 7% when they began to hike rates, is now running at about 2.5%. The most remarkable thing is that the labor market has adjusted, much as Governor Waller indicated, not through rising unemployment, but through firms cutting back on posting vacancies. And so, we're not there yet. No one wants to declare mission accomplished, but certainly relative to where we were 2+ years ago, it's looking like a pretty successful disinflation.
That's PIMCO Global Economic Advisor and former Fed Vice Chair Richard Clarida speaking with Bloomberg's The Asia Trade. All right, still to come. Kotak Investment Banking shares their outlook on Indian stocks amid fundraising sprees through IPOs and block trades. Their Managing Director V. Jayasankar joins us exclusively next. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You're watching the India focus, and let's take a look at Indian markets just ahead of the open. It's kind of a mixed picture around most of the Asia Pac today. So we've got Indian futures looking modestly positive territory at the moment. The market open coming up in just over 1.5 minutes' time. Well, our next guest is a seasoned investment banker with more than 30 years' experience in India's capital markets. He's also helped raise money for big conglomerates like Reliance, Aditya Birla and Tata. Joining us exclusively now, V. Jayasankar, board member and MD of Kotak Investment Banking. V, thanks so much for joining us today. You've got an impressive track record. You're a veteran of India's equity capital markets as well. So if you look back over the stretch of the last 3 decades, can you describe for us this phase of Indian equities, particularly in terms of capital, in terms of fundraising and fundraising from multinational corporations as well?
Sure, Paul. The Indian markets have, I would say, dramatically transformed after the COVID period. So we used to raise less than $10 billion annually prior to COVID. And to give you a little bit of a scale, the Indian capital markets raised about $38 billion last calendar year, a growth of 4x prior to COVID. And that put us as the 4th largest ECM market globally, just behind US, China, and Japan. And what has driven this fundamentally are 3 factors. One is clearly the strong Indian macro stability in the policy and the strong growth of the Indian corporate sector. The second has been the great degree of liquidity that's come up in the domestic market space from the mutual funds, insurance, and others. And the third factor has been the robust performance of all the corporates, right? And therefore, you see phenomenal returns of the Nifty in the last 1 year of over 20%, the mid cap and small cap over 60%. All of this coming together has really created a very robust, steady Indian equity capital market.
Yeah, well, let's look into some of those reasons in a little bit more depth. I mean, do you expect the Indian units of multinational firms to list in India, or some of those multinational firms to perhaps sell their Indian stakes going forward?
That's an interesting question, Paul, and there's a conversation we have with several of our clients. Obviously, the Indian markets are trading at very significant premium to where the global parent trades. If you list in India, you can probably get a premium of 3x or 4x or 5x across several sectors. So that is very compelling. And what this does is it gives several options to the MNC parent to look at global asset allocation. Should they take some chips off the block from India and use that growth capital either to manage the balance sheet or for consolidation or for growth in other markets? So India is becoming a very strategic market for listing for several MNCs, particularly in the last, I would say, couple of years. The second factor I would say is we have seen significant sell downs by foreign promoters. For example, in the first half, it's been a phenomenal $6 billion of sell down. And this has been driven mainly by 5 to 6 large entities like Vodafone selling down in Indus Tower. And we had bad sell down in ITC. These are two of the largest sell downs. So $6 billion is unusually high. And I think what the Indian market depth has created are options for MNCs to either list their Indian subsidiaries or for their listed entities to probably look at a strategic sell down, still retain control over 51%, but you get several options in a global context.
Well, the first half was very active in terms of IPOs. We saw some record amounts of block trades as well. Do you see that momentum being sustained into the second half?
Certainly, Paul, to give you a context, last year, the ECM market was roughly in India $38 billion. The first half has already seen 26 billion. And we are yet to see the largest of IPOs come to the Indian market. Many of them are targeted in the second half. The sell downs, both by the foreign promoters as well as the private equity investors, will continue to be very robust. We have already seen $26 billion of sell down in the first half as compared to 38. And I expect this to probably cross 55 billion, maybe even touch 60 billion in the current financial year. So a growth from 38 to 60 billion is a phenomenal, call it a growth rate of nearly 50%.
We've also seen a lot of participation from retail investors, particularly through flows into mutual funds as well. How much of that's been helping propel the IPO market?
Paul, that's a very interesting question, and I'll give you some statistic which will help you understand the depth of the local market. Since calendar 21, in the last 3.5 years, FIs have pumped in about $10 billion of money cumulatively in 3.5 years. During the same time, the domestic institutional investors have pumped in 10x, which is $100 billion, right? And in addition, retail investors have also invested alongside. While I may not have the exact statistic, it is far more meaningful than what the FII investors have pumped in. So what this has done is it has brought huge amount of local liquidity, supporting local growth, and therefore the volatility that you see in Indian markets are far, far lower than what you see globally. And this level of lower volatility and strong returns from the market is really serving as a great platform. If India is growing at 6.5% plus on GDP, and when the flows are as strong as 50 or 60 billion, you need fresh paper. If you do not have fresh paper matching this liquidity, you will have an asset bubble. And the good news is both last year and this year, we are seeing enough high quality paper, whether in the form of sell downs or IPOs, really balancing this and providing that much required demand supply match.
So, yeah, we've seen a big rally as you've outlined here, but do you see any risks to this? I mean, are there risks around corporate earnings or credit growth? Has there been a dent to sentiment post-election at all, or is even the market looking perhaps a little overstretched?
Paul, there are going to be voices that will say Indian market perhaps is overstretched. I do not necessarily belong to that camp. The reason being, if you look at the large caps are trading at a 10% premium to the 10-year average in terms of valuation multiples. And therefore, India is not that expensive when you look at the kind of long-term growth. If you look at the mid cap and the small cap, yes, they're probably given much higher return. There could be some pockets of concern over there. And if corporate earnings do not match up, I probably think the market will take a breather, given the level of liquidity we have, given the amount, the quality of issuance that's in the pipeline. I think a breather is probably what you may probably expect as a risk. Indian market in the last 3.5 years has not been shut down for more than a period of, call it 1 or 2 months. And therefore, we have the tendency to correct faster and use that breather to find new supports of investing.
All right, Vijaya Sankar of Kotak Investment Banking, thanks so much for joining us today. Let's take a look at how Indian markets are doing at the moment. In the pre-market, things were looking fairly positive. This is how markets are looking right now. We've got the Sensex better by 1/5 of 1%. The bank index looking kind of flat at the moment. The Nifty also better by about 1/4 of 1%. The rupee still hovering around those record lows, although dollar strength has been something of a theme today. Take a look at these two stocks, though. A couple of tech stocks in India. HCL Technology, that's software development and related services. On Friday announced earnings. That was a beat on the key metrics. But dig a little bit deeper, and we saw revenue slipping for IT, the business services segment. Europe and the Americas was a bit muted as well. Still performing pretty strongly, though, today, better by 4%. TCS, Tata Consultancy as well, another IT services firm. Net profit there grew 8.7%. The order book, though, declined. The wages bill grew a little bit. So again, a few misgivings buried in that result. But the CEO saying 2025 going to be a better year. All right, here's some earnings to be watching out for from India this week. We've got tech giants Infosys, Wipro also reporting, as well as at Bajaj Auto, JSW Steel and Mukesh Ambani's Reliance Industries as well. US bank earnings also going to continue. Goldman Sachs, Morgan Stanley and Bank of America all set to report. And the first wave of results from Wall Street's lenders, it was a bit disappointing. Wells Fargo slumped to its worst earnings day drop in 3 years. Net interest income missing estimates. Citigroup fell with expenses a concern. And even JP Morgan's steady guidance failed to impress the market. Plenty more ahead. Let's take a look at what's moving in markets. And of course, the assassination attempt on Donald Trump happened on the weekend when nothing was trading, except Bitcoin, of course, which trades all the time. And we did see that move higher, and it's moving higher right now. Of course, President Trump has been something of a friend of cryptocurrency. And he's apparently going to be attending a Bitcoin conference in Nashville on the 27th of July, although after the events of last weekend, we will wait and see whether that still happens or not. But we've got Bitcoin there rising above 60,000. And of course, we've got US futures trading now. First chance for markets in the US to react to the dramatic events of the weekend. And that is it from Bloomberg Markets Asia. Horizons Middle East and Africa up next. This is Bloomberg.